I came up with a term saying, strap in and get ready for squid. Well, for you out there in the fiat world, you might not know about this thing called squid, which is like a digital fiat scam sort of situation, which was a scam coin, digital coin created out of thin air, and it went parabolic, so parabolic that it got up to over $2 trillion in market cap. And then within a fraction of a second, collapsed down to zero. That is what I'm saying is we have to get ready for that. That's like hyperinflation, right? That's what happens. It goes up to like enormous amounts. Everybody is fabulously wealthy if you add it all up on paper until the rug is pulled. So here's an example of what we're starting to see in the headlines. British pound plunges more than 1% after shock Bank of England decision. Bank of England unexpectedly kept rates unchanged. Sterling is now the worst performing G10 currency. So there you see quite a plunge in terms of displacement of economic activity. Of course, it's one of the bigger in the top 5 currencies in the world. So it's a lot of when it makes that sort of move, it's huge ripples.
Right. Well, the Bank of England unchanged at near zero. The European Central Bank unchanged at near zero. Federal Reserve Bank in America unchanged at near zero. That's the latest moves or lack of moves by these 3 major central banks that some would argue control the global economy for the most part because they have the greatest reach, they've got the greatest military strength, the greatest influence post-World War II, and they all are talking about raising rates at some point in the future, as they've been saying now for 20 years. But the baseline fact is that you cannot taper a Ponzi scheme, right? The money printing is the base layer for this huge pyramid scheme that now is spilling over into a hyperinflationary collapse of these fiat monies against assets and particularly against Bitcoin. But we're now in the crack up boom phase that was articulated by economist Hyman Minsky. And this is exactly Weimar Germany, where people are fleeing the fiat money into assets like stocks for the time being as an escape. And the result very quickly now, as we've been predicting now for at least 5 or 6 years here in Keiser Report and documenting every step of the way, every lie told by all of these central bankers, and they're all lies, and the proof is in what's happening right now.
Right. And again, strap in and get ready for squid, because the strap in part is like, it's super exciting at first. It feels great. You're all euphoric. Everything is like, yeah, keep printing, keep printing, keep printing. Everybody's excited, just like a banker. The bankers get really excited when bad economic news happens because they know they're going to get some more free money. So until it all collapses, and it collapses suddenly. It doesn't collapse like slowly. It collapses suddenly. And so the economics of these rug pulls is really important, and the psychology of these rug pulls to see like when everything is pulled out from under the economy. And it was during the pandemic, right? We literally pulled the rug on the entire economy, locked everything down, shut everything down. So it's still an ongoing thing. It's all around us falling apart, and we see it. We see the shortages. We see the supply chain disruptions. We see it all. We can see it, but it still feels euphoric and fun, right? Because everything's going up. Markets keep on hitting all-time new highs. But here you're seeing sort of signs of, just like with this squid scam coin that happened, what it was is like it went up to over $2,000 a coin because everybody could buy, but you could not sell it. So this was an interesting take here on the Washington Post. My latest: American Airlines cancellations are a window into why people are so upset. Quote, if we want to understand the frustrations of roiling Americans and the sudden popularity of Let's Go Brandon, the cancellation imbroglio is actually a good place to start. So they're calling it skimpflation. So everybody has all these Biden bucks. You're getting loads of money. You feel euphoric. You want to go spend it. But everybody has them, including the crew that work on the ground, put your luggage into the planes, the stewardesses and stewards. They are also getting all these Biden bucks. why do they want to show up to work? So everybody's wanting to spend their money, and everybody, including all the workers that would normally prepare the food for you at the restaurant, or man the flight during the actual flight. Nobody wants to show up. So everybody's getting angry and frustration is building.
Right. Price signals are deteriorating in the economy. And it's the difference between, let's say, a capitalist economy and a socialist economy. And in this economy where money's being printed and handed out without any concern in terms of the economic impact, what happens is you get misallocation of capital, which generates more bad price signals, which policymakers look at and then misinterpret. And then their response is to print more money. And the whole negative loop gets exacerbated to the point of systemic failure. So this is exactly the case if you had, let's say, the engine of your car. The little bit of a rattle is starting in the engine. You hear it rattling, and then it reinforces itself over the course of 20 or 30 miles, and then the engine is systemically broken, and then you go to a dead halt, a dead stop. So the economy is suffering something similar. The price signals, the mechanism, the transfer of how to allocate resources between two parties in a free market capitalist system is broken, and now we're coming to a dead stop.
Right, and we're all Biden buckaroos. We've got all these bucks, these free Biden bucks, and we want to spend it. The same happens, however, across the entire spectrum. So all of us, think we're getting to live like a private equity or hedge fund guy who only has to work 1 hour a week, calls up the Fed should anything go wrong, and money gets printed. So, on top of that, you're seeing that the actual meme sort of stocks where it's all a figment of our imagination. The entire economy is a figment of our imagination, really, at this point, or a figment of Joe Biden's imagination.
Well, let me jump in for a second.
Yeah.
Labor is really having a moment here because they're exercising their collective bargaining position for the first time in decades. And I've often said many times that as long as the central bank is able to change the price of money through interest rates outside of a free market mechanism, labor should be able to demand wages that are higher. Minimum wage, they should be able to increase minimum wage. If you want to get rid of minimum wage, then you also have to get rid of the central bank. But you can't have a central bank for the plutocrats to scam the system and then prevent labor from getting a wage commensurate with the money printing. If the hourly wage in America right now, if it kept track with the money printing for the plutocrats, would be $50 to $60 an hour right now. That's where it should be in this environment. So now labor figured this out. They're saying, you know what, we should get $50 or $60 an hour, and we're not going to go to work. And because we're strategically important, just like the banks did in 2008. Remember, they said, we're systemically important. You need to bail us out. Now workers are saying, we're systemically important. You need to give us money, and we'll just stay home, and that's fine.
One of the threats that has always happened to them is, A, we're going to outsource your job. Obviously, with pandemic permanent lockdown, that's difficult, right? And all of the cargo ships being totally backed up for miles on end, that's not a really good threat anymore. And the other was that we would replace you with robots or AI. So I want to look at a story about AI and the failure of AI. So in much of the Western world, we have the property speculator. Usually it used to be the mom and pop sort of property speculator would buy a property, fix it up, and flip it. Well, then Zillow got into the game, and that's an app which gives you a zestimate of what your house might be worth, and people got obsessed with it and fixing up houses and stuff. So Zillow got into that game in 2019. They started actually buying properties because their algorithm, their AI knew better, just like all the quants back in 2008. They knew how to package up all of these subprime debts into something that would actually be AAA, right? Well, Zillow quits home flipping business, cites inability to forecast prices. Going back to your story about capitalism, you shouldn't be able to predict prices.
Well, you never can. You mentioned the subprime. That was this idea that you could predict the market going out 5 or 10 years and package subprime mortgages that would be acceptable to the market. It totally blew up, caused a global financial crisis. Long-term capital management, same thing. Nobel Prize-winning economists. They were in the hedge fund business. They had it all figured out. It blew up, required a massive bailout. Alan Greenspan had to lower rates. 1987 stock market crash. It was, oh, we figured out how to gear the futures market in Chicago and the cash market in New York, and we've created a product called portfolio insurance. Well, it blew up because the quants blew it again. AI doesn't make people smarter. AI just makes people be stupid, with an automated stupidity. It's an automated stupidity. So now Zillow is once again, getting into a situation we've seen dozens of times where they thought they could beat the market. The market's now pounding them. Some say this could be another subprime crisis. They've got to unload 7,000 properties. The company is going under, is in dire straits. But once again, to your point, relying on AI or outsourcing to robots and computers, it transfers, because they're designed by humans, it just transfers human stupidity to a machine.